Hi, I'm Josh. I was born in poverty-laden Flint, Michigan to a blue-collar working family. I went from pulling weeds, washing dishes, and delivering pizzas to building a small business doing over $150,000 a month. I sold it and moved to Costa Rica with my wife and 4 kids. And on this podcast, we explore the secrets and the strategies that I used to win. Building your business is one of the hardest things you will ever do. So let me finally help you automate, grow, and someday sell your company. Hey everybody, thank you so much for hanging out with me. I know you're busy. You're out there doing stuff. You're trying to make money so you can buy groceries and stuff for your kids and buy a jet ski. I totally get it, so I appreciate it, but I'm going to make it worth your while. Today I'm talking to Diane Gardner, and she has the wild and invigorating job of accounting. And she's an accountant and a tax expert, and she does all the number stuff. And I'm kidding, because that seems like the most boring job ever. But when you listen to her talk, you'll understand that that's not the case with her. Diane, how you doing?
I'm doing fantastic. How are you today?
As Dave Ramsey would say, I'm better than I deserve. And that's totally true. It's been a great day, actually, for me. And I have my ups and downs. I'm sure you do. But today, things just were awesome.
Today's been a wonderful day. Here, too, I've been sitting here wrapping up some final tax returns and actually enjoying myself as I've been working on them.
Well, there's nothing more exciting than wrapping up tax returns. I mean, obviously, we can all agree on that. No, I'm kidding.
I know.
I'm kidding. But you know what? On a serious note, business can be fun, and I joke a lot. But this is a really serious issue. And most small people small businesses, they think they know. They might think they have a handle. A lot of people do their own taxes. I did for many years in the beginning until it got totally out of control when I had multiple companies and investors and everything else. But what can someone like you do for a small business other than just take their money? Because these guys, these service companies, they look at a service like you and they're like, well, I can't afford something like this yet. But it's not really an expense. It's really bringing someone onto their team. And a good accountant can make you a ton more money than they cost you. Tell us about that.
Well, Josh, there's a couple of different kinds of accountants out there. And I think this is where people get a little bit confused. You have your traditional accountant, which everybody thinks of as just the number cruncher. They take that pile of receipts that you give them and they get it in the right place, and they get whatever the form is or the tax return or whatever it is. They get that file, they get it done correctly, and they get it done on time, and then they move on to the next project. Then there's accountants like myself and other certified tax coaches that are spread across the U.S. who take a little more proactive stance on stuff. And we like to sit down and have a conversation with that small business owner, take a look at where they are today, where they think they might be over the next, say, 3 years or whatever, and develop a plan to make sure that they're paying the least amount of tax they can legally pay and put that extra cash back into either their pocket or back into their business, or pay down debt or help buy a house or whatever it might be that they want to do with that extra money that they have been giving to the government all along.
Well, some people, maybe they just like giving the government, interest-free loans because they're nice. They're just trying to help out. They want to throw Obama a few extra $1,000, right? Do you ever come across that?
I come across those all the time. And then when they realize they've been giving them such a big tip, they kind of aren't real happy because they didn't realize they were doing that.
Well, and this, to me, is very simple to me. And Robert Kiyosaki, I remember when I was like 18 years old and I got into the Rich Dad, Poor Dad, and I had the epiphany that being an entrepreneur is about assembling a team. And you got to have a legal team. I have an attorney. I have him doing some work for me right now on a contract with a deal we're doing. And then we have our financial people. Then you have your staff, your leadership inside your company. But really our job, even if we're a small business, is to assemble a professional team of high-level people that get on the same page, that build a strategy. And that's what I think I heard you say, is that you can go get a haircut for $5 at Supercuts, or you can get, high-level, detailed personal service from a real beautician that costs a lot more money, but they're going to build a strategy around what you want and what kind of look you're going for. And for you, that's what you're trying to accomplish, right?
You bet. Yes. And it's really cool because instead of being the bearer of bad news, I get to be a tax superhero. And not many accountants get to do that.
Do you wear a cape?
I have a cape.
Just for photo ops, though, right? You don't just wear it because your employees would think you're so weird. No. Okay. But let's get into some serious stuff, because what I'm hoping can happen here is I want to give people actionable stuff that maybe they had never thought of that could change their world kind of today, like right now? And there's got to be some stuff. So I told you before we started recording, our listeners are service companies. They're technicians. They're very good at, cleaning things or servicing a lawn or carpet cleaning or something. Maybe they're not great on the accounting side. So how can they understand really what your brain has to offer them? Can you tell us some strategies, techniques, tips, anything in relation to service companies specifically, maybe some blind spots?
You bet. One of the biggest mistakes that I see people make out there is when their business takes off and it starts becoming successful and they start making a nice little profit, they start outgrowing potentially that first entity type that they chose when they first opened up for business. Because I see the majority of people, they open up for business and they really do nothing. And so it makes them a sole proprietor, which means that 100% of the net profit of that business gets taxed on your personal income tax return. And it's also subject to self-employment tax. And so I see them overpaying sometimes anywhere from, say, maybe a small amount as $3,000 or $5,000 a year, all the way up into $30,000, $40,000, $50,000 a year, just because they've outgrown their entity type. And they didn't realize that that's something that they need to revisit every few years.
Right. Okay. So let's break it down to ground level for maybe some newbies out there. So you're a sole prop. So that means you go to the county clerk's office and you get a DBA. And maybe you don't even have a DBA. Maybe you're a lawn guy and people write checks to you. And by the way, if you're doing that, don't do that. That's not professional. But that's kind of the level one, right? And then most businesses kind of look at like LLCs. And I think you can be taxed as a sole prop or as a partnership or as a S corp. I'll have you help us with that in a minute. But then you got, S corps and all that. And you kind of move up the ladder as your revenue grows. Is that what you're saying?
Well, it can move up the ladder as the revenue grows, but not always. So there is a full-blown analysis that really needs to be done. And that analysis includes not only things from the tax standpoint, but fringe benefits, liability protection, all types of stuff goes into that analysis to determine what entity type would best serve you today and for the next several years into the future.
Would it be crazy if we did like a mock analysis right now on like a hypothetical scenario? Like, is that too much to throw at you? Like even a stripped down minimum analysis, like I can role play and be a small business and you ask me questions about my revenue and kind of go through the process?
Sure.
That would be awesome. Okay. My name's Bob and I have Bob's Lawn Care. That's totally my deal, right? And I love cutting grass. It's my passion. Ever since I was 6, I love cutting grass. So I started a lawn care business 2 years ago, and I now have 2 employees, one full-time, one part-time. And last year in 2015, let's say hypothetically, we did 65,000 in revenue, but this year we're on pace to do 100. And I just got a contract for $100,000 additional revenue account, my first big corporate account. And I'm freaking out. I'm coming to you. I'm like, I need to buy equipment. I need to hire more people. I don't even know about if sole prop's good or bad. I'm not even thinking about that. I'm trying to survive my business, but I'm scared. Diane, help me.
This is a normal person I see all the time. So glad to meet you, Bob.
Yeah, thanks.
Yes. So first of all, if we're just talking about things from the entity side, the fact that the business is set to almost double from the year before to this last year and then to almost double again this next year, that has red flags going all over in front of my eyes just because I know what that could do to you tax-wise. Mm-hmm. So we definitely want to take a look at some entities. We want to take a look at what do we think that net profit of that business could be? Because if you are going to have to buy some equipment and hire some people, I'm going to want to start pulling some numbers out of the air and jotting down some figures and coming up with what could that net profit be? How much of it could be subject to self-employment tax?
Well, let's say in 2015, my net profit out of the 65 was actually 50 because I sucked all the extra cash out of my business and I bought jet skis and I went on vacation, but because I wasn't taking it serious. And then this year when I hired my full-time, my part-time employee, I realized, holy smokes, I didn't save any money for capital expenses. I don't have any money to buy new lawnmowers. So I've tightened it back. So right now, I'm only going to take, 25% out, in owner draw net profit combination there. What would you say to that?
Okay. So that gives us a little bit of cash to work with then. Because otherwise you've stripped yourself out of cash and it makes it kind of hard to do anything. Mm-hmm. So we want to come up with, if we think that full-time employee is going to cost you
I
Well,
pay him
realistically,
I pay him 500 a week.
okay. And I say it depends what part of the country you're in as to how many months out of the year you're going to be working. Up here in Idaho, you'd be working about 9 months.
Okay, let's
So,
go with that. That sounds perfect. So
okay.
I'm paying 9
So,
months, 4.3 weeks. It's like 40 weeks. So it's like 20 grand a year is going to that
yeah,
guy.
2020. Okay. By the time we add some payroll taxes and stuff on there, let's say we've got a good 28,000 in payroll
Perfect.
for him. Okay, you're going to have to buy some equipment, some of that type of thing. So you're probably going to dump another 20,000 in some equipment.
Yep, that sounds about right.
Handle that big of a job.
Mm-hmm. Yep, that sounds about right. And I got 15,000 cash on hand right now.
Okay.
What do you think?
Then we got to look at, you're going to have some other supplies and stuff. So if we think we're going to be grossing,
I'm going to do 100 this year, but for next year I'm going to do 200 minimum because of this new contract.
Right. So right now we're looking at a net profit of somewhere in probably the 30 to 40,000 range, because we got to factor in insurance and advertising and phone and supplies and chemicals and all that kind of stuff.
Which I really haven't even considered. And when I call someone like you, you're going to help bring the clarity I need to understand that I need those things. And what got me to 60,000 in revenue isn't going to get me to $1 million in revenue. And so there's higher level thinking has to happen, and executive mindsets. And I need people like Diane. And we don't have to go all the way in the weeds with this, but I thought that would be fun for people to hear.
You bet.
And so someone that has a business like that, they're going to need to get maybe into an LLC or something. Is that where you're leaning so far, based on our totally fake scenario with nowhere near enough information?
Based on our totally fake scenario, the first step, if you're in an LLC friendly state, would be to possibly look at an LLC. But then as this business grows the next year with that additional $100,000 contract, then we might want to look at that LLC being taxed as another entity, such as an S Corp or a C Corp, but probably more along the lines of an S Corp, to give us a little bit of more flexibility on the planning end of things.
So I'm no expert with all this, but my understanding is like an LLC is it's kind of a hybrid. Is it a pass-through entity? Is that what they call it?
Yes, it is a hybrid pass-through, which is why it makes it one of our favorite entities to work with, because it can act like a sole proprietorship. It can act like a partnership if you and a buddy want to pull together and do something, or it can act like a corporation. So it gives us a lot of planning flexibility, and it also provides a lot of liability protection, because depending on what's in that next contract for another 100,000, you might have a little bit more liability than you do when you're just taking care of lawns.
Right. Well, let's say that my employee runs over a cat, which would be horrific. Okay, maybe that's a terrible example, but he runs over a cat on accident and the cat just spits out the side of the mower. It's a disaster. The clients are freaking out. Compare what could happen liability-wise between that horrific situation on a sole prop compared to maybe an LLC.
Can I up the ante from a cat to something bigger? You run over the kid.
We run over a kid's foot, and his whole foot is gone now because my employee wasn't properly trained, because I was riding my jet ski, right? So now the kid's foot's gone. It's a disaster. What happens?
Now you've got this humongous lawsuit over your head. If you're a sole proprietorship, potentially they can sue you and take any and all of your assets. So there goes your jet ski.
My
you won't
jet
have time
ski?
to ride
Wait,
that anymore.
But the jet ski it's in my name. It's not in the. I don't use it for business.
I know.
Oh,
your house is probably gone too.
Oh gosh.
And your car.
Oh.
And your wife's car, or any of that kind of stuff. Yeah.
Okay. Well, that's a serious thing, because the service companies. They have semi-risky jobs, like really. My company did roof cleaning and things, so we'd be on people's roofs and walking around up there. People can fall off, and it's not just the property damage or running over a kid. There's also your staff, right? Does that come into play? My employee could fall off a ladder, and he could sue me for my jet ski potentially.
You bet. Bye-bye jet ski. Yeah.
I'm stressed out now. I got to stop role playing. I got to remember this isn't real, okay? Because now I have anxiety. Okay, so that's kind of what your company does, is walk through that, unpack it, give people peace of mind. And the problem for you, though, Diane, is people don't really worry about this stuff until something bad happens. And then they come running to you like, please fix it. And then your hands are probably tied in a lot of ways, right?
Yeah. It's much easier if they'll come see somebody like me at the beginning, and we can plan for kind of that worst case scenario. Not that I'm a pessimist or anything, but plan for that worst case scenario so that it almost ensures that it really doesn't happen because you've planned for it. And if in the case it did happen, you know exactly what you're doing. Because if Bob was an LLC in an LLC friendly state, potentially he just built a fence around him and his business, and he was able to protect those personal assets, and he's still got his jet ski.
Gotcha. Okay, that makes sense. So in the beginning, you said you're a certified tax coach, whatever that means, right? What does that even mean? I mean, so you have all these accountants. They're all smarter than me. They're super nerdy with their calculators and numbers. What does that extra, accreditation or letters mean to a small business person?
Somebody with the letters CTC or Certified Tax Coach behind their name means that they've had extra additional training in proactive tax strategies that are all IRS approved and court tested. So it is totally above the board, completely legal. It is just taking various tax savings ideas from the code that most people aren't even aware that they can do and applying them to real life.
Right. And you know what? It's funny. The debates were last night, right? I don't know when this will go live, but the presidential debates last night, and everybody was freaking out on Donald Trump because he didn't release his tax returns, right? And I'm watching it and I'm thinking, well, if let's say he paid zero in taxes, right? Everybody wants to pay the minimum legal amount, right? Isn't the tax code there to be leveraged for small business people? Isn't one of the reasons highly successful entrepreneurs are successful because they understand these things and they use them? Doesn't mean they're an evil person at all. It means that why in the world would you want to pay more as a charitable donation to, the government to spend on a hammer and pay $600 for it or be wasteful with it? That's crazy, right?
You bet. Yes. Yeah. The tax code is full of incentives for small business people. The problem is most small business people don't know what they don't know. And so it makes it really hard for them to get in and take advantage of those incentives and tax write-offs. But that's where they go back to that idea of building a team, surrounding yourself with the proper team who makes it their life's work to understand this stuff and to constantly be learning. You'd be surprised how much continuing education people like myself do just to be able to stay up on that tax code because it changes all the time.
How would you like to hang out with me for a whole week? I'm talking every single day for 7 days. Well, you can. You need to join my 7-day challenge. It's completely free. It's a ton of fun. Every single day, you get a special message with a short video from me firing you up to get rocking and kick your butt into gear for your business. Just send a text message, 7-day, to 44222. You got to spell it out, SEVENDAY. Text it to 44222, or you can find a link at automategrowsell.com.
Well, and, most people, a lot of little businesses, they only see somebody about these issues one time a year during the week they need to do it. And then that's it. Like they don't have a real partnership with anybody that's really digging in and having maybe quarterly reviews or meetings or whatever. And you're not going to get the same result out of that. I mean, if you were married to someone and you only saw them April 15th, you're not going to have a very good relationship. Like how can they add value to your life if you never work with them?
Right. Yes. Speaking of that scenario, I was chuckling to myself because out on my website, as part of a bundle of free reports I give, I have a little special report out there that says how choosing an accountant is a lot like dating. Because you do have to have the same philosophies and the same entrepreneurial drive and that type of thing, or you don't click well with your accountant and then you don't end up spending time with them and being proactive about setting up a time to meet periodically and that type of thing.
Yeah. And, it's hard because I lived in that survival mode for a business. Like I have so much compassion, Diane, for the small business people out there. Honestly, authentically, it is hard. You're trying to sell. You're trying to be the bookkeeper. You got an employee who doesn't show up. It's just a mess. Cash flow. You don't understand anything. It's scary. You're terrified. There's financial uncertainty. And then they listen to a podcast like this and they're like, oh, great. Another thing. I don't have time for another thing. And I get it. I totally get it. But I hope people understand, look, this is a fundamental, foundational part of operating a successful business. You have to have a money person. You have to have your salespeople. If you do what you can do and do less of what you stink at. And when you bring someone like Diane into the fold, it brings time and stability and peace off of your shoulders, and it puts it on hers, and she can handle it. It's her deal. So I have a few more questions. Can I ask you some more questions?
You bet.
Okay. So with deductions, you said the tax code is full of incentives. What are some of the most, missed deductions or incentives that, small businesses make?
One that I see missed all the time is just a simple one of taking something that's an after-tax deduction and turning it into a pre-tax deduction. Something as simple as your kids like to go to basketball camp or horse camp or football camp or something along those lines. Well, if you do it correctly, you could potentially hire them to work in your business and pay them a real paycheck, and there's certain requirements you have to fulfill. But then you take that money that you paid them, and now you use that money to pay for that horse camp or basketball camp or football camp or soccer camp or whatever it might be.
Or accounting camp. I'm sure those are very popular for high school kids.
Yeah,
that sounds exciting.
Or even private school. So it's a way to take an after-tax deduction, something you're already spending money on, and potentially turn it around and write it off through your business.
That is really good. That's really good.
Yeah.
And that's just a general financial planning strategy. I mean, that goes beyond accounting, right? And no one would tell someone that unless they sat down and talked to them and you knew that they had kids and you actually are motivated to be part of their team, not just a transactional, here, pay me some money to file your return. There has to be that relationship for these things to even be discovered, to even find out, right?
Right. Yes.
So what are some tips? Obviously you want people to hire you because you're so great, but in general, what should we look for? Is there red flags we can catch on like the bad accountants? Like if we're vetting some accountants and we want to know, is this person, really good? Do they know what they're doing? Are they really going to be invested in me? Or are they just a transactional person? How do we know the right professional to work with? How do we find them?
Well, first of all, you want to look for somebody with the letter CTC behind their name, which is that certified tax coach, because those people, and there's about 400 of us across the U.S.
That's it?
Those people, yes.
That's not that many.
There's not. No, that's why we're so special.
Wow,
but we will really tend to be more proactive, sitting down, meeting with these clients on a regular basis, and not just doing that transactional once a year. Toss me your forms and I, do the tax return for you and don't see you again until next year. So that's probably the biggest thing. Back to that report that I have on the website, in there is a whole bunch of questions that you can ask potential accountants to just kind of help you understand, what should you be asking.
Okay, perfect. That sounds good. Yeah. And to close out, I want to ask you some additional questions about your business, because I like just talking to entrepreneurs, and accountant or not, you're an entrepreneur. I mean, you started a business, you went through a recession, you're doing your thing, you're just doing stuff. So you have your own pain and suffering in your business. Tell us how you got into business for yourself rather than just working for another firm.
Well, I've been in business for myself since I was about 28 years old.
So 1 year.
1 or 2 years.
Got
it. Because I was just so passionate about helping other small business owners, and the various accountants that I was working for back early in my career didn't seem to really care. They were more about how much we could charge them, that type of thing, as opposed to what kind of a difference can I make in their life.
Yep.
And so that's
a transactional mentality instead of the relational. And that goes across all business. If you will serve other people, you cannot fail in the long run. If it's genuine and you really care, money follows after that. To me, if you chase just the dollars, there's limitations and it's not fulfilling, But if you're passionate about numbers and what you do, you want to serve people, of course you're going to find clients. Of course they're going to talk, right?
You bet. Yes.
So your business couldn't have been warm and fuzzy the whole time. I mean, did you have any bad, dark, scary, terrifying moments?
I've had a couple really bad, dark, scary, terrifying moments. I went through a major earthquake when I had my business down in California. It leveled over half of our town. That was a pretty scary time period. And then more recently, the recession that we went through back in 2008, 9, 10, right in that time period, where I completely reinvented my business as we were coming out the other side.
Well, tell us about that. Give us some nuggets. Share the details. We're just like you, Diane. We're just not as good with numbers, but we're trying to struggle and grow our business. How did you get out of that? What changed?
Well, what changed, first of all, was my mindset. Because prior to that, I just wanted to basically sit behind my desk, do whatever work the clients needed me to do, and I was completely content doing that. I was not an out front kind of person. You never would have seen me on a podcast interview or seen my face on a book or anything like that. With that recession, it shook things up badly enough because I had just purchased the commercial building that my business is in, and all of a sudden I was on hook for a 20-year loan and went, oh my gosh, what am I going to do? So decided I needed to come up with a niche, just like all service type businesses,
Amen.
because otherwise I was just being compared to every other accountant in the area. And there's a bunch of them where I live. And so by coming up with a niche, which was my proactive tax planning, I now set myself apart from all the other accountants, which is great because people can no longer compare me to the other accountants. And it's allowed me to start working nationwide, to where I'm not limited to my geographical area. It's allowed me to develop authority and credibility because I now have 8 books out there. I've done hundreds and hundreds of podcast interviews, to where I'm now getting known as somebody who knows what they're talking about, which is allowing me to be more picky as to who I take for clients. I no longer have to take anybody who walks in the door, which is where we all are at the beginning.
Yes.
Good, bad, or otherwise, you'll take them as a client or a customer.
Well, that's awesome. I mean,
yes, it's changed my business.
Yeah, and it's applicable to everything we talk about on my show in general anyway, because there's riches in the niches. I didn't make that up, but that's a good one. You want to drill down. You want to get really, really good at something specific rather than trying to be all things to all people. Besides, it's a more profitable way to do business, right? And you can serve your clients at a higher level because you're catering to a specific type of person, and you can be more choosy. And even with all the cleaning businesses, service businesses that listen to this, everything she just said is totally applicable to you. I mean, if you're a lawn care, a carpet cleaner, or a pressure washing company, what is setting you apart? What's the difference? Does a general homeowner who doesn't know you from anybody know why they should pick you? I mean, if you're not intentional about creating separation in space, then you're just a commodity, right? And so they go, company A, how much to do my tax return? Company B, how much to wash my house? Company C, oh, you're the chief. Okay, come on and do it. And the only way to separate that is by creating space, by being super unique, by being out there, by being way over the top with your service, your marketing, your literature, your logo, your web, everything. It just has to be better and different and unique to create the perceived value. I'm sure you agree with that, right, Diane?
You bet. And the good news is you don't even have to write all that stuff yourself. There's people out there who are professional writers who will write up a blog post for you, or who will put together a newsletter, or they'll write an ebook or something like that you can put your name on, because that's what they do best, is write. And that's not what the rest of us do.
We waste so much time doing what we are terrible at. And this is a perfect example with accounting, because this is not like accounting worry about it season. I think people aren't panicked yet. They will in like February, March, but they're going to try to do it themselves. They're going to order QuickBooks, or TurboTax or whatever it is. And they're going to throw it in there and just tell themselves how good of a job they did, not even understanding the power of it, at a minimum, investigating and being intentional with looking into, is there something I'm missing? Is it possible I don't know everything? It's a crazy concept, and I'm learning that the older I get, the less I know, honestly. So,
me too.
How can people contact you, Diane, if they want to connect, do some sort of a planning session or whatever, a consultation? How does that work?
Well, Josh, the best thing for them to do is go out to www.taxcoachforyou.com, and that's the number 4 in there. And when they do that, they can order a free copy of one of my books. I've got one called The 10 Most Expensive Tax Mistakes That Cost You Thousands. I've also got a contractor's version out there. I've got a real estate professional version out there. As we continue to kind of get into our niches a little bit more, they can download some free reports and stuff. And then I like to do what we call a free tax analysis, which allows them to send in their last 2 years' tax returns. I'll take a look at them, give them some tips if I can come up with anything based on what they've got going. If I see them really overpaying their taxes, then we'll go into a deeper discussion as to what it would take to put a plan in place to help them plan for the future and lower that tax liability.
That sounds really, really, really good. I thank you so much for taking time out of your day. I'm sure you are just covered in calculators and numbers everywhere, and you cleared it all off just to talk to me, Diane. Thank you so much.
You are so welcome. Anytime.
And sorry for all the accounting jokes. They're all meant very lovingly. And also, I love that you did the fake scenario walkthrough on the spot, not pre-rehearsed. That's a lot of pressure. You did a great job. And I think you can add a lot of value to the people that listen to the show. Until we connect again, Diane, have a great rest of your week.
You too. Thank you so much.
Hey, thanks for hanging out, friends. And from all of us here at the Quick Talk Podcast team, we hope you loved today's show. We hope that you were inspired to become a doer and not just a listener. Apply what you've heard today in your own business and watch things change for the better. Lastly, remember that all the money in the world can't save your soul. Seek first the kingdom of God, my friends. We'll see you next time.
For more information about the Quick Talk Podcast or Joshua's other businesses, visit our website, quicktalkpodcast.com. Have a blessed day.